Hey everyone, I'm Michelle Markey and I'm here today with Alejandro Salcedo, who is kind to go over a company analysis for Lithia Motors with us. And if you're a Warren Buffett-style investor, he's going to point out some fundamentals that you may want to pay attention to. So with that, take it away, Alejandro.
Hello guys, hello Michelle, thanks for having me here. I'm going to present Lithia Motors. It's a company I found really interesting because of different facts I'm going to talk to you about. So let's get started with it. So what they do, they have 4 segments. They sell new cars, they sell used cars, they finance those cars, and they insure those cars. This is really good because they are able to use every segment of their business to protect themselves and optimize all the capital invested in their business. So, for example, they sell a new car and they finance it. And with time, let's say one of those customers is not able to pay. So what they do is they take that car back so they don't lose that finance money that they lend that customer, and they just resell it through the channel of used cars. So this is a type of business where they protect themselves in every way, and they are really getting out the most out of every dollar. So this is the reason it really got me into looking into it and the different aspects of it. They manage around 48 brands. This is some of the most important ones: Toyota, Mazda, Chrysler, Acura, Honda. What is the interesting about this? So, for example, if I'm Toyota, I just open a shop and I just have to sell Toyota. In the other side, Lithia, what they do is they optimize the brand they sell the most in that specific market. So let's say in Florida, the car you sell the most is Corolla. So they put most of their inventory in Toyota Corollas. And let's say in California, the most you sell is Acura because it's a more premium market. So most of their inventory is Acura. I'm just giving an example of just a little part of the brand, but they really optimize their space to get the most dollars out of every dollar invested. So that's really interesting. So how they grow, different from a lot of companies. They try to just buy shops. So as we can see, 65% of their free cash flow is invested in buying new dealerships. So this is really interesting because they see the cash flow, they see how much they're going to make. So it's really predictable, really like Warren Buffett would like to, how he likes to buy his company. Just like really predictable, really easy, not much to it, and just obviously at the right price. I mean, they try not to pay over the real price of what it is. They also open new shops, but most of it is just buying new dealerships. At the moment, they are about to get to 300 in the country. So their sales by segment revenue is basically most of it new vehicles. Used vehicles is the second, so that's most of it. But something really interesting that we can see here is that they just have in revenue 4.6% in finance and insurance, but out of the gross profit is almost 1/4. So this segment is really, really lucrative. So it's very interesting to see that in their business model. Now we're going to see a little of the highlights of the balance sheet and income statement and cash flow. So we see that they finance a big part of their inventory with a floor plan notes payable and the current liabilities. So out of their around 4.2 billion that they have in inventory, they are financing with like short-term loans, which is really important when you see a business, because a lot of times you see a business that has a big inventory, but they are paying that with long-term debt. So basically they are paying interest in that inventory that is sitting in their shelves. Lithia just has half of that money, just stick to it. So I mean, we are always looking for businesses that have are being financed by their suppliers. We can see how their revenue has grown, and that's super interesting. I mean, they doubled their revenue in the last 2 years, and that's like amazing. But something we always have to be paying attention to is that growing revenue is not good if you are not growing your revenue profitably. So what they've done, like we have seen, is they have invested a lot in buying new dealerships, and that's how they've grown. But we have to go at the end of the line and see, oh, the gross profit has grown too. So I mean, that's really good. But if we saw, I mean, we can see a lot of companies where we just see like this huge growth, but at the end of the day, they're many times they're losing more money than they used to be. So as Warren Buffett always says, for example, with insurance, is like they want to grow, but they want to grow profitably. They don't want to just grow by just growing. So they have the purpose of growing profitably. And yeah, as we can see, they have spent a lot, around $6 billion in buying new dealerships. And with that $6 billion, I go back because that's how they were able to double their sales, which is something that I find fascinating. Again, growing profitably is something that we have to have always in mind. This is what they have in inventory. So basically, they have about the same of new vehicles and used vehicles. As we can see, they've been growing their inventory in the new vehicles, actually, because it's what they sell the most. So I just wanted to point this out. And yeah, to conclude, this is a company that I found super interesting because they're trying to integrate every part, trying to get the most out of every dollar through acquisitions, which is something that they are focusing, predicting what they want to do. They don't want to just invest by investing. They want to invest in something that maybe is not such a big win, but it's a win, which is something Warren Buffett always talks about. I want to grow with wins. So yeah, that's what I wanted to present to you, Michelle.
And thank you so much, Alejandro, for giving this overview. And I wanted to ask you about the cash flows. What were your thoughts? I was seeing a little bit on the cash flows. Do you feel like that type of growth with where you highlighted, like I think you highlighted the row cash paid for acquisitions? Could you tell us a little bit more about what you're looking at there?
So basically what I'm looking here is what they have spent in the dealerships. So as we can see, it's around 6 billion. And with those 6 billion, they have grown their sales by double. So basically before 2020, before spending any of that money, they were selling, let's say, 13 billion total. Now, by spending 6 billion, they are selling more than the double. And as we can see down in gross profit, they also double gross profit. So basically they spend 6 billion to get almost 3 billion of profit, which is something amazing. And that is the type of business I think we as investors should be looking at.
Mm-hmm. Well, and what do you think of the eventual effect on the final free cash flows? Because I imagine that they will go up. Like so far, they kind of got half back of what they invested, right? By investing 6 billion, they increased gross profit by 3 billion. But what about the final net free cash flows? Because I know that's also a very important aspect of what Buffett looks for.
I think it really depends on the part of the business that you add, because Buffett tries to get the most out of every dollar invested. And if you are able to grow your incremental capital profitably, like here Lithia is doing, he just keeps tying that money to the business. When he finds out that, for example, with Candy, as he always tells, that they were trying to grow that business, but they came, let's say, to Florida and they weren't able to make a profit. So he just starts redirecting that cash. So I think Lithia is in the path to just try to grow as much as they can, as long as they can do it profitably. So I think they have a good runway still to keep growing profitably. So that's what I will answer you to that question.
Thank you. Yeah, and how do you think they managed to, basically double in revenues and gross profit since 2020? That's a amazing growth that during the pandemic where there was a lot of shortage of supply. Like, were there some dealerships that were struggling, and then did they come in to help, save some of the struggling dealerships by buying them? Is that part of how they grew a lot?
Yeah, I found that they like the dealership business is a very segmented business. So like it's not really one big guy at the moment. So they took advantage of those little, I mean, I wouldn't say little, but like 5 shops that maybe they were in a town, they were struggling financially, and they have good cash behind their back, they have good credit. So they took advantage of that, and they just centralized the operation, reduced costs on those, let's say, 5 dealerships, and just start making a profit out of that, which is something that is really interesting to me.
Yeah. And do you think they're going to continue trying to grow as aggressively as they have in the last few years? Like that type of performance seems really impressive to more than double revenues in only a couple of years. It's very impressive.
I feel they have that, that Buffett mindset, like when you ask him, I mean, what are you going to do in the next few years? And I think they are, from what I read in the annual report, they are really trying to take advantage of opportunities. So like, let's say the market presents itself with opportunities, they are going to keep growing. If the market just is overpricing like the dealerships, they are just going to try to get the most out of what they have. But I mean, they are really looking for opportunities to grow. But again, like I said, I sound like a parrot that profitably.
Yeah, totally. I mean, that's a great point. And I also wanted to ask, like, why are dealerships such a great business model? Like that, I know Buffett and Munger have said, like, like the car dealerships are pretty good business because, if you have one of those and you have like a different kind of business, like say in one little town, like you have a McDonald's, a car dealership, and an apartment complex, like you only need 3 or 4 businesses and you will be very wealthy in life, for example. So how how do we know when dealerships are a good business model, or if they, how do you know if Lithia Motors is investing in the right ones?
I think Lithia, it is investing in the right ones because they really have a team where like they see the history of those businesses. So they're, let's say, like you said, Warren Buffett, they probably go in a town and just find that they have one good dealership and they just buy that one good dealership. They really try to act with that monopoly type of, not monopoly, but yeah, monopoly type of mindset. Why do I think it's such a good business? Is because I really believe it depends a lot on how they manage the balance sheet, in the way that if you have a dealership where you are getting your cars on inventory, basically with not having to buy those cars, maybe just people, let's say, live in them, and you can just sell and just charge on the commission. I mean, that is a good type of business. Lithia, of course, they buy the cars, but part of them is financed by their suppliers. So as you can see, out of the 4 billion they have on inventory, 2 billion is being financed by short-term debt, which is basically the people leaving the car there until you sell it.
And that's better compared to others. Like if we compare Lithia to some of their competitors, the fact that they leverage more short-term debt is to their net benefit, right? Because they can maybe turn over inventory faster than, say, someone else that's maybe using more long-term debt because maybe the inventory is staying longer with them. Is that part of why they're able to, kind of move more, they're able to move faster, maybe?
Yeah, I mean, they are one of the biggest ones. So, I mean, again, if let's say you and me open a dealership shop, I mean, obviously banks are not going to lend us money so easy. we don't have the trust of that brand yet, because I mean, we just have one, but they do have the trust of the banks. They do have the trust of the towns where they operate. They do have the trust of them buying those dealerships that have been there for years. So they're really taking advantage of every part of their business.
No, that's great. Well, thank you so much, Alejandro, for that. And I just wanted to ask if you had any final closing comments, and otherwise, this has been really great learning about Lithia Motors.
Yeah, I mean, it's been great. I just think my closing comments will be just like, stay curious. I mean, either you want to invest or you want to open your own business, just getting this type of lessons out of every business and put it into your mind and put it into your mental models, like Mr. Munger says, is what you have to do to get better at this. It could be through investing or it could be through your own shop.
Yeah, absolutely. Well, thank you so much, Alejandro, and till next time.
Thank you.